So you're looking for a mortgage in Switzerland and you're thinking about what is a SARON. We are mortgage brokers in Switzerland, former bankers, and I'm going to tell you what a SARON is and for who it is very useful, who should get a SARON. A SARON is a financial product out of two components. Firstly, the SARON, it stands for Swiss average rate overnight, and the margin of the bank. These two things. Now, the SARON right now is at 0%. It's the rate banks pay if they're lending to each other money, if you want to talk about it. Now, the second thing, you don't have any negotiation on that. It is what it is. The second part, that's where you have some space for negotiating, and where the rate is different at every bank. It's the margin of the bank. And there are margins right now from 0.5 to 1.2% for properties you use for yourself and you live in it. And what's the difference? The difference is what kind of client are you? How much money do you have? What kind of income do you have? How much equity you put down? That's very important. Then what kind of negotiation do you do? Do you have the time to go from bank to bank? And the second thing is the bank looking for a mortgage? Meaning, if banks are not looking for mortgages, they will have very high prices. That's like a Swiss way to say, hey look, we are not looking for you right now. Go take a look with other banks. Meaning now, let's get back to the SARON. So the SARON right now, let's say you have a margin from the bank of 0.9 and the SARON itself. SARON is 0%, margin is 0.9, meaning your rate is 0.9%. You have to pay 0.9%. If now the SARON goes up to 1%, you will have the SARON 1% and the bank margin 0.9, meaning you will pay 1.9%. Now a cool thing is a SARON usually has a duration. Some have 6 months, others have 3 years, 5 years. But in this period of time you are fixing your banking margin. So the second part. There are some banks, a lot of banks who went up with their banking margin, meaning in this duration they are not able to change anything with the bank margin. And the cool thing with a SARON is, while you're in this duration, let's say you close a SARON for 3 years and after 1 year you're thinking about getting everything in a fixed rate, you can change from SARON to fixed rate mortgage, but not from fixed rate to SARON. It's very interesting. So, and who is it for? For my father, for example, my father wanted to have a fixed budget. He wanted to know what is he able to pay every month, how much interest payments does he have to do every month. So he doesn't like SARON because SARON is up and down. It's for someone who isn't afraid of taking risk, someone who follows what is happening on the world with the politicians, and someone who doesn't care if he has to pay for some period of time 2x, 3 times much as he maybe thought about it. Then you can get a SARON. It's very important to have a very good rate. It's a negotiating thing, and you need to know which banks are looking for mortgages. If you don't like this variety going up and down like stocks, then it's the wrong thing for you. You shouldn't do. You can make a portion of you can split your mortgage in a fixed rate and in a SARON, that's possible, but it's very important to have good consultation to know which mortgage suits you. And very important, if you're looking for a mortgage, you need a very good rate. And you need to know which banks are looking for mortgages, then you get better rates. And you need to know, okay, what's the limit? Which is now really the best rate. If you don't have time to go from bank to bank, and if you don't have the connections that we have to our bankers, because we are former bankers, you can just fill out the form for a free consultation. We work with over 30 banks. Our clients, they don't need to take care of anything. we take care of everything, but the first thing is just to know what your situation is and if we are able to help you. So just fill out the form and we can see if we are able to help you.